In case you missed it, today's highly anticipated World Cup soccer match between the U.S. and Germany ended with a 1-0 victory for German team. But despite that loss, the U.S. was still able to advance to the next round of 16 teams. And in the next round of NBR's, our own Ultimate Stock Cup, we pit two of the world's biggest industrial conglomerates against each other. Namely, we want to see who's going to come out on the global marketplace on top, Germany's Siemens or the U.S.'s General Electric. Watch. GE's roots go back to inventor Thomas Edison. His Edison Electric Light Company merged with Thomson Houston Electric to form General Electric in 1892. Headquarters, Fairfield, Connecticut. 2013 revenue, just above $146 billion. GE is the last of the original 12 companies in the Dow Jones Industrial Average still listed. Long gone are the days when it was known mostly for light bulbs. GE now makes trains, jet engines, power turbines, and medical devices. But in recent years, its finance company, GE Capital, has made up more than half its business. GE's German counterpart, Siemens, trades mostly in the German markets. Founded in 1847, it is headquartered in Munich, Germany. 2013 revenues, more than $109 billion. Siemens and GE compete in many of the same fields, but Siemens is more of a global player, which is what makes their intense rivalry to buy French power company Alstom so interesting. Alstom is well connected to emerging markets like China, and it's the kind of company that can make GE more of an international powerhouse.
Peter Sorrentino joins us now with his play-by-play of GE and Siemens. He's Senior Portfolio Manager of Huntington Asset Advisors. So, Peter, your portfolio has a lot more shares of General Electric than Siemens, but you're saying that Siemens is your choice in this competition.
Bit of a contradiction there it is, Susie. Our view in at least in the next 12 months is that Siemens has got a clear roadmap. We're seeing a build out globally of world power grids and a need to improve the efficiencies of those grids. Siemens has a great deal of presence. About 30% of their business overall is in that area. And so they've got a well-established footprint there. And as you pointed out, they are well-established in a number of outside of their domestic markets right now. That said, GE has been growing faster in those markets, and so I can see, why the deal made sense for Siemens to go after Alstom this was an ability for them to jumpstart what has been rather anemic growth in those markets for their products. For GE, it's basically extending their footprint out. It makes sense, but Siemens, in a masterful bit of political daring-do, forced GE to accept terms on the deal that are going to make it much more complex to execute. Right. It's going to bring a lot of other players in, and so this is why we think in the near term Siemens is the stock to own, because for them it's clear sailing ahead. They've got a better revenue visibility going for the next 12 months. For GE, there's a lot of execution risk in here, and we think that'll distract the stock for a while.
Yeah, I mean, GE has portrayed the Alstom victory as just that, as a victory over Siemens and so forth. But you are saying this is not exactly a slam dunk for Jeff Immelt there at GE, is it?
No, it's not. And for anyone who's been in the stock for as long as we have, which is well over a decade now, the Amersham deal, which was also supposed to be one that made huge synergies and a great deal of sense for GE medical equipment, it has really been a bit of a disappointment, and we've struggled every quarter with something that's kept that from firing. And so if you're a GE shareholder over the last 10 years, you get a little deja vu in here, and you start to get a little nervous that we've heard this song before, and you worry about, well, gee, what's my return going to be, in the next 10 years?
All right, so for investors, if they want to put some new money in, you're saying put it into Siemens. The stock is around $100 right now. How much can they expect on the upside if they do that today?
Really, I think in the next 12 months, if everything goes as we're forecasting, I think you can see a 10% run in Siemens share price. That doesn't include effectively a comparable dividend of 3%, so a fairly nice return. We think the dollar is expensive relative to the euro right now, so a good time to be buying. And we don't think in the next 12 months you're going to get that kind of price performance out of GE. Too many investors are going to sit on the sidelines and not race to own it.
All right. Well, thanks a lot, Peter. Peter Sorrentino of Huntington Funds.
So you just heard our guest. He prefers Siemens over GE. We want to hear from you, though, at the same time. Who do you prefer right now on the global stage, GE or Siemens? Vote on our website at nbr.com.
And now for the results from Tuesday's Global Rivals Challenge, where we asked you to choose between McDonald's and Yum brands. Well, the winners is McDonald's, but it was pretty close. 49% of you voted for Yum, 51% for Mickey D's.